All right. Looks like I'm live. This is, of course, the first awkward few minutes before the first people show up on the stream here. So basically, this is a financial, live stream or whatever. Do this once a week, generally on Wednesdays. You guys are free to ask me any questions whatsoever or none whatsoever. This was completely unplanned. I haven't done one in about a month. So yeah, let's get it done. Anyway, hold on a second here. Let's see if I'm actually broadcasting. All right, view live in the control room. All right, so it looks like I have 2 viewers. So can someone out there let me know at least if the audio is working? I never seem to know if it is. I'll be looking for an answer here. And let's talk about what's going on in the world of finance today. And I'm really excited about the announcement with SoFi. I know this is going to come up over and over and over in the broadcast today because my viewers, of course, know that I have been long invested in SoFi. I hold a significant amount of shares, and yeah. Oh, John and Mimi's journey. Thank you so much. You know what? I checked out your channel not too long ago. I'm sorry, I don't remember what I watched on there, but I did check out your channel. And just wanted to say thank you for tuning in today. If you guys have any questions, go ahead and shoot with those. Let's talk about for a minute, though, the big news with SoFi. SoFi announced today that regulators have indicated they've cleared that final hurdle in terms of getting approved for a bank charter, which most analysts feel like that's going to be a real catalyst for them in terms of growing their revenues. So I do want to say that the one of the Seeking Alpha authors made a really good point, though, that based on the agreement that they have with Golden Pacific Bank, or I think it's Golden Pacific Bank, the bank that they bought, that there will be $750 million leaving the balance sheet from SoFi and going to Golden Pacific. So it's going to make their balance sheet look a little bit artificially over leveraged at this point. So what I do expect to see from here is rising share prices. Yep, Steve O says, welcome back, Jason. Look, guys, I got sick over the holidays. Thankfully, it was not COVID. Then had a bunch of guests in town. Then took me a while to just get my schedule back right. But I am back doing these broadcasts once a week. Doing one totally sober on this Wednesday. Normally, I have a few beers. Going to be totally sober this Wednesday because I am planning to do a going away celebration on Friday with one of my longtime students in my jiu-jitsu academy. He's relocating to another state. So we are gonna have a party, all of us vaccinated folks, I guess, and having a party in a local brewery. Anyway, Raman Mittal says, what's your thoughts on the current market pullback? Do you think it's a normal correction, or are we headed for a more severe downturn? I think it's a normal correction. I think that this year is probably going to be maybe a rough year for stocks overall. I think we're going to see a positive year because everything about the economy actually, not everything, but most things about the economy are actually pointing in a really positive manner. And this is one of the points I tried to make in my videos last week and the week before that, that all the doom and gloom that you see in the media and all the doom and gloom that you see on YouTube is actually masking all of the positive numbers we have from all of the traditional forward indicators that we have when we're evaluating the economy. And in that respect, everything really, really looks good. So, no, I'm expecting maybe muted, more normalized returns in the stock market. If we see a good year and where the stock market is up 7% in a year, that's actually good, folks. That's not terrible. It's been such a long time since we've really experienced a long downturn in the market. But anyway, I see this as a normal pullback. It might be anywhere from 10 to 15%. We see recovery sometime in the middle of the year. I also see supply chain chaos is probably going to normalize at some point. I think that our strategy in terms of going back to work and the way that the public has decided to handle the response to COVID at this point, it's probably going to be effective. I think we really see the light at the end of the tunnel here. And by June, it's all going to be a bad memory. Now, folks, there's no return to normal. All right. Whatever we have going forward is going to be a new version of normal. there are some permanent changes to the economy. People are going to be working from home now forever. A large proportion of people that went home from work are probably not going to go back to the office permanently. That's a great thing. But it is going to change a few things. Like there are a lot of commercial REITs that I want no part of right now. Like REITs that specialize in office parks, I want no part of. Something like Realty Income, which has like really large anchor tenants, like they have the Home Depots, the Lowe's, the Walmarts. They have those folks as that's the kind of retail REIT that I would still be interested in owning or even purchasing more of. But a lot of retail and a lot of office real estate has kind of changed irrevocably. I think there may not be a point where people go back to work in an office permanently. And I think that changes the workforce forever. And we don't know what's coming along. So, but as I see the current market pullback as something being perfectly normal. I think that the Fed is talking a big game right now on inflation. We're probably going to see raises of 0.25% per quarter. We might see 3 of those this year. Look, guys, don't fight the Fed. Of course, that's one of the number one rules of investing. Don't start taking outsized risks. And if you're heavily leveraged right now, you may want to think about deleveraging as there are certain stocks that are more interest rate dependent than others are, right? So I would definitely be cautious going forward. I think if you're planning on a 30 to 50% gain, I think that's foolish. If you're planning on your expectation should be a little bit more muted, a little bit more realistic, and a little bit more in line with historical norms. That's what I think. So Omar says, silver, will it continue to go higher? That depends. There is not the tight correlation between precious metal prices and inflation like people think there is. That really became so. There has always been this idea that it is, but if you look back at the last 30 years or so, that really has not been the case. That inflation has been tied with an increase in precious metals prices. So I do think that it can go higher from this point. How high it is not my guess. I am not like a gold bug or heavy metals or a precious metals kind of person. It's usually a really small portion of my portfolio. It's never been something that I've been terribly interested in. Moonboy says, do you think the Federal Open Markets Commission on January 26 will be more aggressive or dovish towards the market based on Biden's press conference? Looks like, so based on, so one of the reasons that, the members of the Federal Reserve are not, they're really approved by the president. They're not necessarily appointed by him, but that process is really independent. It's supposed to be independent of any sort of political process. So I wouldn't judge what you think that the Federal Reserve is going to do, or the Federal Open Markets, whatever that stand for. It's basically the purchasing assets in the open market. They're not going to do anything based on directions from the Biden administration, from the Trump administration, from the Obama administration, the Bush administration. Ostensibly, they're supposed to be independent from politics. Now, I don't think anyone's actually independent from politics entirely, but they're going to do, they've already signaled exactly what they're going to do. If you guys know what the Beige Book is, it's something that's published periodically by the Federal Reserve. And if you read the Beige Book, there's actually no surprises in anything that they actually publish or say. They tell you that ahead of time in the Beige Book. We are looking at probably 3 interest rate raises here in the next year, barring any giant surprises here. So, So Raman Mittal also says, biotech is beaten down. Given the advances in genetic tech, do you think 2022 is going to be a tear in the year of biotech? So I don't know that it's been a tear. It's going to be that it's going to be this year. I do know one thing. I was just listening to a podcast recently by a couple of different prominent geneticists, and they were talking about how when they first started mapping the genome, and when they first started looking at some of the associations that they were trying to make with different gene technology, they thought that this process would take 6 decades, and in as little as 6 years, they're seeing progress that they never could have imagined. So I have taken this opportunity to acquire more ARC-G. Now, I'm in a position where repositioning my portfolio, because I've been investing for a very long time, I tend to buy things with the idea of holding them forever and not disposing of them. I'm in the position where if I want to move money around, there's a giant tax consequence to do it. So I do when I have new money coming in right now. Some of that has been going to Xpeng or will be going to Xpeng. It hasn't yet, and some of it has been going to ARKG. ARKG has actually been one of my more frequent purchases over the last couple of months because it's down. But folks, this is a really long-term investment for me, right? I'm really thinking a time frame of 10 to 20 years before we see a giant payoff in this. It may come a lot sooner than that. That's what these gene scientists and biologists in this podcast that I was listening to were talking about. But no, I do think that exponential growth in that field is coming. I also think that it's not really useful to try and go and pick individual companies in that space. Try to hold that sector in an ETF of some sort and have a wide variety of offerings. There's a couple of different fields where I think it's going to be far more advantageous for the majority of people. Now, there's always going to be that one person that chooses that perfect stock that 100x's and they put in $10,000 and end up retiring it in on a beach in Tahiti. There's always going to be that one person, but for the majority of people, you aren't going to be that lucky. And I think particularly in sectors where you probably don't really understand. Let's face it, I'm supremely interested in genetics because of my personal background and not knowing anything about my own genetic makeup and not knowing what genetic surprises were coming for me or my children. So I've always been interested in gene technology. I've done a lot of personal research on the subject. Still, I don't have the confidence to look at any company's technology and say, hey, this is a sure winner. I really don't. And I've been wrong a couple of times too. So this is one of those sectors that I prefer to hold broadly in an ETF. And ARKG was one of the first ones out there. There are a couple of other ones now that are definitely just as good. So anyway, so there's another sector that I think you guys should hold broadly as well, and that's anything related to the electric vehicle battery supply chain. And we'll get into that in a minute. I want to address a few of the questions here. But yeah, so and there's a couple of big reasons why. Steve O says, ARK, I'm down 30%, serious mistake. Does it make sense to you to DCA or cut losses and never touch ARK again? Okay, so look, ARK. All right, so look, Steve. I did a video on this years ago where I said never buy the best performing mutual fund. Never buy the best performing mutual fund, right? I did that video twice, actually, 2 different versions of it. Nobody liked it. Nobody watched it, right? Because that's simply not the way the human brain works. But what I can tell you is that if a mutual fund is the best performs in the top quartile of its class in any 5-year period, there's a virtual guarantee that it's going to be in the bottom half in the next 5-year period. Virtual guarantee, right? So there are a few exceptions to that rule, but that's just one of those things that happens, and there are a variety of factors behind that. Sometimes the strategy goes out of favor. Sometimes there's asset bloat in the portfolio. Sometimes there's drift in terms of what they're actually doing. In terms of ARK, though, this is a very different story, though. The ARK's thesis is an extremely long-range thesis here. They started this company in 2014. Their thesis reached out for like 40 years. One bad year since 2014 doesn't mean that their strategy isn't working. It doesn't mean that you shouldn't touch ARK. Their strategy is extremely, extremely long-term. And if you read their white papers that they put out on their different subjects, they're still very much committed to the idea of disruptive innovation. Now, does that model work in every corner of the investment world that they're invested in? I'm not sure that it does. I do think that ARK in a way is probably going. It got out. The Nasdaq actually outperformed it this year. I don't think it's going to do that in the future. But what you need to really look at is something called risk-adjusted return, right? Look at something called the Sharpe ratio of the mutual fund or of the ETF versus the overall market. There should be a way of measuring the amount of return that you're getting for every unit of risk that you're assuming, and that's what the Sharpe ratio is. You have to find the level of Sharpe ratio that is comfortable for you. I'm very comfortable with a highly volatile portfolio. I don't have a ton of ARK, but I do have, I believe, across a couple of accounts, I have 2 accounts, I have 200 shares. And I even sell options on that, by the way. I sell call options on that, way out of the money call options to generate a little bit of income. And interestingly enough, it's actually hard to make any money at all normally selling call options on ETFs, but because ARK's funds are so volatile, you can actually make a pretty decent, you can actually make a good 0.5% per month on selling options on your ARK funds, really with a delta of around 0.3 to 0.2, and you can make about 0.5% per month, and that's on average, because occasionally you have to unwind those trades. But no, I am definitely never touching ARK. ARK G is something that I've actually been buying more of. I bought a little bit more ARK K recently, I like even numbers. One of my accounts had 91 shares of ARK K. So it's been down, so I bought like another 9 shares. So now I'm an even 200. So Vampiro, we covered SoFi a little bit earlier. I'm really enormously pleased with SoFi right now. I know that if you guys watched my videos and then went out and bought SoFi based on that, it may have been very tough to sit through this downturn, right? But remember, I look at things with an extremely long-term view. I look at the massive changes that are going on in the financial world and how folks younger than I am, 10, 15, 20 years younger than I am, they simply do business in ways that are very different than people of my generation or older did. Like I'm probably the first generation of Americans who does not want to go to a bank, period. I don't want to go at all. I never want to step foot in a bank ever again. I'm doing everything online through apps, through my phone. But I'm probably the oldest person out there who's really like that. And everyone else is probably much younger. I'm one of the younger people out there. The oldest person. Everyone else like that is a little bit younger than I am. So, yeah, so a couple of, King Carlo Bossio. I'm going to get to your question in a minute here. I have very different opinions on Palantir, largely because I worked for government contractors for like 18 years. And let's talk about that. Okay. So thoughts on SoFi. So SoFi's earnings are coming up next, and that's really the next big catalyst. What I expect to see from SoFi is, of course, widening loss over 2021 as they are really investing in the future of their technology platform. But what I'm expecting to see is organic growth in the Galileo technology platform and organic growth in terms of members as well. So I know for a fact they gained one member. That's me. So I applied for a loan to refinance one of my properties, and I opened up an investment account, and I did a couple of other things on their platform. So no, I'm absolutely very pleased with them. That's what I expect to see from earnings. I'm not going to be surprised if they break the $17.50 amount, say like mid-February, and they kind of stay above that forever. By June or so, hit 25. By the end of the year, right around 35. Because right now they're not exactly expensive at 24 times earnings. They're not really all that expensive right now. So, So anyway, let's talk about Palantir just for a moment. King Basio says, welcome back. Thank you very much. And want to remind you guys that super chat features are on if you feel so inclined. It does make me feel good when you guys drop me a buck or two here and there. Bought Palantir at $4.52 after hours. Makes no sense. Am I crazy to think this company can 10x in the next 5 years? So it's not crazy to think that the company can 10x in the next 5 years, but let's stretch that out to it's not crazy, but I think borders on crazy. They would have to make significant strides and breakthrough into the private sector in order for that to happen. And that's kind of one of the issues that I have with them right now is they aren't really even all that great at winning government contracts, and they haven't figured out. So a lot of being successful as a government contractor is actually learning to speak the language of government contractors, learning how to bid on projects, and learning how to influence people in the right way. They've been living on the mystique of their Osama bin Laden accomplishments for quite some time. And from what I understand from people that are working with the software is that all of the competitors are catching up. Most of the people who worked at Palantir for a long time, they're major talent that helped them develop their tools. When they went public, they waited for as long as they could. They sold their shares and they left. The compensation package they have right now, which is, I think that the highest paid developer there makes like $127,000 a year, and everything else is based on the performance of their stock. Well, that really has not looked very good for more than a year now. And they're losing talent left and right. So Do I think necessarily, do they have a great product now? Yes, they do. According to everyone that I spoke to that actually used it, I've actually seen it work in practice myself as well. Although I didn't get a chance to play with it, that wasn't part of the deal. But from what I could tell, it was a great visualization tool. It doesn't do everything, and I said, speaking to developers, it doesn't do everything that the general public thinks that it does. You have to hire outside expertise, third-party developers to make it dance to the tune that you want it to, which is an additional cost, or you can pay Palantir to do that as well. So they're kind of selling you a product and selling you a service. But no, I think that people don't really understand the world of government contracting. If you saw a doubling of this stock in the next year from 14, if it broke $30 a share in the next year, I wouldn't be surprised, and that would be completely in line with my expectations. If it made about 15 or 20% a year after that, that's actually fantastic performance for a stock. If it did that for like 5 years, but no, as a 10x in the next 5 years, I don't think that's likely just because of who their clients are now. They need to make significant strides in the private sector. Raman Natal says, not financial advice. I'm a doctor. I think Beam, Intellia, and Verve Therapeutics leading research in genetics. Yeah, I mean, I'm not a doctor. Like I said, just a long-term nerd here. But no, and that's all of those companies are in the ARKG portfolio, and that's one of the reasons why I prefer to hold that. They actually hire an army of specialists to look into these companies, not just from an investment standpoint, but from an actual technology standpoint, which is something that I don't have the expertise to do or the money to do, right? And none of us do. We have to rely a lot of times on third-party research. And so when you look at someone who's paid based on assets under management, which is what the ARK Invest people are paid on, they're paid to be right. Their motivations are to grow their asset base, and they can only do that if they have performance in the underlying assets, right? So they're doing research in a way that's in line with my motivations and your motivations. That's not necessarily true when you go out there and you just buy research, right? Because sometimes you're not buying. There's a lot of that's not necessarily true. Like I said, when you're just doing your own research, you're reading articles, their research is not necessarily in line with your goals. When you're reading the white papers that like ARKG is putting out or the ARK Invest is putting out, those are in line with your goals here. So Marie L says, is the concern between FAA and the rollout of 5G internet with airports correct? Yes, it is correct. But so what they're looking at doing is delaying the rollout of 5G within a certain radius of airports, because 5G will actually interfere with some older devices as planes that need to be changed out. A little bit of an argument here. This is bandwidth that was auctioned off to these major carriers by the federal government. They've told them they could use it. Now the FAA is saying this is going to interfere with our communications, and it has something to do with landing. So there's going to be a delay. The argument really is not whether 5G is going to become a reality. It's going to be delayed. The argument is who's going to pay to upgrade the planes to a newer technology. That's really what's going to be hammered out before we see 5G come on board. So it's just a matter of time at this point. Just like the bank charter for SoFi was a matter of time, so is the rollout of 5G nationwide. So Terrence Kwong says, I finally got that charter though. Wish it was back in November when it was 25. Man, actually, I think even if they had gotten the charter back in November when it was 25, all fintechs have declined. If you've looked at the price of Square right now, I've got to find a way to free up some cash to buy more Square. I just think that if you look at the growth, their revenue growth over the last couple of years, that doesn't look like that's slowing down at any time whatsoever. I really need to free up some cash to buy some Square stock. So I'm planning to do that just as soon as I can. So, yeah. So would you expect a bigger correction in the Nasdaq? So we are below right now. And Christian, I think so there's a little bit of delay in the chat. So I think you sent me a $5 super chat. I wanted to say thank you. But can we expect a bigger correction in the Nasdaq? I think it's entirely possible that we can expect a bigger correction in the Nasdaq. There's a couple of things happening right now. Like I've never seen more normal people invested, like regular Joes invested in the market than I have now. And I've been I've been working in the financial industry for about 25 years, as a financial planner for about 17 years. And I've never seen more regular people with just a few bucks invested in the market, and trading in a way that I know is going to test them when we have something bad happen. And I think it's going to magnify some of these riskier stocks. Now, and I also think that a lot of people don't understand that you can't really fight the Fed here. I think there's going to be an opportunity throughout this year to pick up a lot of stocks at bargain rock bottom prices. And if you guys saw my video on XPeng, there's a couple of different car companies in China that are going to be hitting that production bottleneck here pretty soon. Some of that has to do with battery acquisition. Some of that has, but anyway, it's a matter of timing here. And that's what's happening with stocks here on the Nasdaq too. We just hit a period where we have a ton of new people getting into the market right when we're going to see. What happens is you're looking at future cash flows being discounted for a lot of these growth companies. And that's going to affect the sort of expected return that a lot of investors or a lot of professional investors want for a company. And they're going to start disposing of those shares at these high prices right now. And just kind of waiting on the sidelines for a bit, or repositioning into something that's a little bit safer, right? A little bit more stable. Like, so instead of owning a really small technology company that's like, maybe you're going to reposition into Google or reposition into Apple or something like that. So I do think that there's a lot of people that are taking risk off the table here, and that could cause a bigger correction on the Nasdaq. Whether or not this is a disaster depends on how long your time horizon is. My time horizon is really, really long. So I really don't care if the market crashes by 20 or 30% in the next 6 months. My patience lasts a lot longer than 6 months does. And I'll just continue making money by selling way out of the money put options on stocks that I know are probably going to go back up in the next 6 months. That's something we should eventually talk about on this channel as well, is an option strategy to generate income on long-term investments. I sell options. I almost never sell my actual stocks. Almost never. And I rarely unwind trades too. So we'll have to talk about that at some point in here. Hess Happen says, gonna be in your area this weekend. Well, hit me up, man. Like I said, I'm gonna be out partying on Friday night with some of my students. So I don't know how spry I'm going to be this weekend, but so I have Upstart down 12%. Should I hold or sell? Thank you, our Tilray. So I'm not going to give any advice on weed stocks. Not that I have an objection to it. It's just not something that I know very much about. I have issues with the weed industry not being able to connect to the financial industry. That's a giant concern of mine right now. And I have issues with how successful they can really be if you're not including the retail aspect of something you can invest in. Right now, you can only invest in production. You can't invest in the retail aspect as well. Although one of my former Patreon members made some really good points about some Canadian retailers that are public there that you can invest in. But in terms of Upstart, I'm down 12%. Should I hold or sell? I could never actually give you advice because I'm an actual financial planner. It's actually not permitted for me to tell you to buy or sell something on a YouTube live stream. I tell you one thing though, Upstart looked really attractive to me at $175 a share. I have not looked at it in a couple of weeks, largely because I'm trying to resist the urge to buy it. It's not that I don't want to buy it. I do. I'd love to buy Upstart. I just have a bunch of other things that I want to buy too. So in terms of stocks, like I don't like to buy actual things. I only buy stocks. So in terms of Canopy growth and Tilray down 46%, I can't really give you any advice at all on that. In terms of Upstart, they have a solid business model, and financials in general, after an initial shock that comes with rising interest rates, they tend to perform really, really well because the spread between what they're loaning, or their deposit operations and their loan operations starts to grow and grow and grow. And financials never make more money than when interest rates are really high. It's back in the day when I mean, I'll give you an example. Like back in the day when you wanted to get a mortgage in the late 1990s, you may have gotten 9% on your mortgage. You may have had your note was 9% on your mortgage. I mean, in fact, one of my first mortgages, I think my note was like 9.5 or 9.75% or something like that. And then the deposit rates that I got on my CDs at the bank for a 6-month CD were 3%. So, and they had a special where they would pay you, if you got a 6-month CD, they'd give you a 4% interest rate, yet they're turning around and loaning that money out at 9.75% to people like me. It's a giant spread on for every $100,000 they get, the spread on that is like $5,000 in profit. We've had zero spread, almost nothing, negative spreads in the last couple of years when you take out the cost of operations. So that's all going to change for banks. If you think banks have been profitable for the last 10 years, 12 years, they're just going to get more profitable. And it's going to be amazing to see their profits. Right now, banks have been unjustifiably beaten down, and it's going to look really, really good for banks in the next 2 or 3 years. And interest rates don't have to go that high for their operations to improve. So let me see here. Did you see the 80% on some stocks like Vroom that has more cash in the balance sheet than what the company is valid at is normal? Actually, I don't know anything about that case. I'm sorry, I haven't seen that, Mark. Sorry, I don't know that. So King Carlo Basio says, thanks for the answer. I know you're not crazy about this. He's referencing Palantir. That's why I wanted to hear from you. You must check, though. I believe massive contracts with all the car companies are coming to help. I want to, so I don't, so I'm, like I said, I'm familiar with Palantir's, the way they operate. I don't know necessarily how the car companies would integrate Palantir, and well, with supply chain management, yes, with their civilian product and supply chain management, yes, they could. You are correct. I'm sorry, you are correct. I wasn't thinking about that. I'm just thinking about their other products I was looking at. But in terms of, here's the other thing that you don't realize about Palantir in terms of law enforcement. They actually have a giant competitor right now that no one's talking about, and that is evidence.com, which is either owned by or works hand in hand with Axon right now. And evidence.com and Axon is providing a lot of the AI solutions. And if you don't know about evidence.com, you don't know about Axon and the future of policing here. I did a video on that a few months ago at the recommendation from someone from my Patreon group. I am more and more impressed by this company every day. If you go on, oh man, I have this guilty pleasure that I want to talk about. I do like to watch police videos of policemen acting really badly and getting put on the spot. And at the bottom of every one of those videos is the Axon label and the name of their company, because that's who provides all of those body cameras, right? So yeah, they have a huge side gig. It's not really a side gig. I think it's going to become their main gig in housing data and evidence from different police departments all across the United States. And they have this huge AI that's used to make connections between those data sets, right? So basically, it's like the Palantir of police data at this point. And they're doing, in a way, and it's because they have the data, they're doing what Palantir can't, and they're making giant inroads with law enforcement. And I think it's only a matter of time before it's not just connecting local police departments. They're going to be doing it at a national level, and I think they're going to take over some of this area. So I do see that Axon is actually going to be a threat to Palantir in that respect in some of their government contracting. Like I said, though, the real test for me is to see whether or not Palantir is going to make big inroads in the private sector to help with supply chain issues. But yes, Palantir, thank you. I can never read stock, one long time watcher says, just push a note, but what stock do you like the most or hate the most for the earnings season? Like, is defined as a big beat and a raise up 15%, or vice versa for hate. Honestly, let me go a little bit further on that. And I'm going to make a call right now that I will not regret. I will not regret this call. And it's a stock that's actually beaten down right now. And it's a stock that looks very expensive now. But I'm telling you, it's not going to look expensive a decade from now. If you don't buy the stock today, a decade from now, you're going to be kicking yourself in the butt. If you don't own Nvidia, you are a crazy person. For everything that I talk about on my channel, everything that ARK Invest talks about, and that's all all six of their major platforms that they talk about. Everything, Nvidia is involved. They're involved in cloud computing. They're involved in the so-called edge computing. They're involved in AI. They're involved in machine learning, deep learning. They're involved in in web services. They're involved in the metaverse. They're involved in self-driving technologies. They have this huge thing in the medical industry. They're massively involved in AI for genomics. In fact, that is what's powering a lot of this genomic revolution. If you don't own Nvidia now, and I don't say go out and buy the specific price. You have to figure out where it is that you want to do. But if you're not thinking that Nvidia is going to be one of the largest and most influential and powerful companies in the world in the next 10 years, I'm going to say right now that you're wrong. Check back on this video 10 years from now. This is going to be, I think this will be the possibly with the exception of some small caps right now that are going to 100x. If you look at anything that's a large cap stock right now, I think that Nvidia will be the top performing large cap stock in the next decade. Quote me on that. I think it's going to outperform Tesla. All right. For all of those things that I talked about, they have their hands in, and they're a technology leader in just about everything. I do think one of the things you can expect from Nvidia, which we haven't seen in a while, is secondary offerings, though. I think those are coming out because I think they want to expand their manufacturing base here quite a bit. But yeah, so in terms of earnings season, they're going to look really good for this earnings season. And it's only going to get better and better and better. But this is a stock that for one reason or another, people look at it more as a blue chip than as a real growth leader. No, it's going to be a growth leader among large cap stocks for the next decade. So, yep. And Christian Thompson, thank you for the super chat. Chris Palmer also, thank you for the super chat. I really do appreciate that, guys. What small business do you suggest as a starter business? So that's a hard question to ask or to do. So I had a number of businesses that I owned a jet ski rental business in college that failed. I owned a software company a few years later that failed. And I wasn't really successful at business. And now I own a bunch of businesses, right? But I wasn't really successful at business until I bought one that was already profitable. And that was kind of the key. Like I bought one that was already profitable, but kind of limping along, and the owner had kind of lost the will to make it a little bit better. I came in, reorganized the staff, reorganized the way things were marketed, retargeted who we wanted as clients, and sort of improve from there. So it's kind of cheating as far as getting a business going. And then I moved on and did that with a second business, right? And then finally, I had the courage to go out there and start one from scratch. And that was a few years ago. And then I just recently started the second one from scratch, and that'll probably be profitable by the end of next month. At least that's what I'm hoping, that second business I've started from scratch is going to be profitable from next month. So very, very happy about this. Yeah. But as far as a starter business, though, you would need to find something that you have an expertise in first. Like I don't actually know what you do for a living. But it would be something that you have expertise in first, or at least some sort of deep knowledge or experience in. And that may be, I'm perfectly willing to have, because you're part of my Patreon, I'm perfectly willing to have a private conversation with you guys with how I got started, the exact mechanics of doing it, the money I needed to raise, the documents I had to file, the permits I needed to get, all that stuff in order to get started. Perfectly willing to help you guys do that. Let me know. We'll schedule a Patreon only Zoom meeting. So Epic Cancer says, we touched on this in the Discord. What's the best way to play the Chinese EV market this year? I believe the numbers will be very strong in China. So I think the number is going to be very strong in China. But let me preface this by saying that my long-term strategy is not going to change here. I do think that NIO, they've not been my favorite. XPeng has been my favorite. but NIO is a little bit unjustifiably beat up at this point right now. I would say that XBON, for a variety of reasons, does their market. You should always laugh at market cap, right? It's not the best indicator of how great a company really is. And so when I say that XBON's market cap should be larger than NIO's, that's really just because I think they're a better organized company. They're further along in the manufacturing process as far as scaling production. They are a better manufacturer than the original manufacturing partner they had with Haima. The problem with NIO is they're still tied to JAC, and JAC is a third-rate manufacturer, just like Haima is. But they're still tied to them, right? And they haven't been able to break free of that. So that arrangement, to a degree, is going to become less important as NeoPark opens here, and they have more of an equal relationship. That is also going to become less important as I know that NIO has started to really solve the problems in terms of their battery supply chain, which XBON is. There's just not as much information out there as to whether or not they're really doing that. They could have all kinds of plans that I don't know about because I'm not picking it up in Chinese media, or at least I'm not seeing translated versions of it. But in terms of building factories and scaling production, XBON is ahead. They're going to have 2 more factories online within the next 12 months, one in Guangzhou and the other one in Wuhan. And then there's rumors already that there's another project in, I think, Chengdu. Anyway, but if you watch my video, I talked about how you're probably going to see a bit of a production stall with XBON. Their max production that they can get out of the factory they have now, if they had people working 7 days a week, 3 shifts, it's probably between 20 and 22,000 at most vehicles per month. That's all they can do. So they hit 16,000 at the end of January, or end of December. January is probably going to look good, like 16,500, provided they don't have any problems with their supply chain. It's going to look pretty good. February, going to see a giant dip in production because of Chinese New Year. A lot of investors aren't going to understand this when they see those numbers come out. They're going to see that the deliveries got crushed, and they're going to say it's supply chain issues. They're going to say it's incompetence. There's no demand. I'm telling you, the demand for electric vehicles is unlimited in China, unlimited. And it's unlimited for one good reason. If you live in a major city in China, that's the reason. Basically, income in major cities versus income in the countryside, there's such a disparity that basically you can't afford to buy a new car unless you live in a city, right? One of the bigger cities. You can't afford to buy an ICE car if you live in a larger city. And here's the reason why. They auction off license plates there for internal combustion engine vehicles. And those license plates, depending on your location, now could go anywhere from $12,000 to $20,000 just to get a license plate for your internal combustion engine vehicle. Yet, if you buy an electric vehicle, there is no there's no fee for that license plate for an electric vehicle. And that's one of the ways that they're subsidizing the industry and encouraging adoption of EVs. That's one of the reasons why I think all of the estimates as far as how fast the Chinese market is going to switch to electric vehicles is wrong. They're all wrong. It's going to be a massive shift. And the only thing that's going to limit that shift is, can they make enough batteries? That's really the only thing that's going to limit it. And the price is going to continue to drop and drop and drop in China. We already have sub $25,000 vehicles in China. We actually already have sub $15,000 electric vehicles that have 200 miles of range in China. BYD Dolphin, for example, that's only going to get cheaper. Like, I would not be surprised if we have a sub $12,000 vehicle with 250 miles of range and, basic bells and whistles by the end of 2023. I would not be surprised if we have that. Like, something that I would drive around, because I'm a cheap bastard, something that I would drive around. And I don't think that that's too far off in the future. The only thing limiting that is batteries, essentially. Can they get enough material out of the ground to make enough batteries? That's the only thing. So the best way to play the Chinese EV market, the best ways to play the Chinese EV market are actually not available to us, because many of the companies that are going to start catching up to NIO and XPeng and Li Auto in terms of production are not traded on U.S. stock exchanges. Like Hosan is one of the largest producers of EVs. I didn't even know who they were until 3 months ago. And then in December, they produced 8,000 vehicles. So, and there's a half a dozen companies out there that I'm not paying attention to, like Great Wall, Cherry, like all these. And yeah, some of them make crap cars, but they're all improving. I don't know anything about Hozon's vehicles. And then there's the GAC Neo collaboration. They're actually starting to produce vehicles. I think they almost made 4,000 vehicles last month. I think all of those guys are going to start catching up as their factories are just coming online. They're just ramping up production. So you're going to have this perception that Neo and Lee and XPeng, at least until their new factories are completed, you're going to have this perception that all their competitors are grabbing market share. The market is actually unlimited there. They sell 20 to 22 million vehicles a year in China. That's the market that has to be addressed. Right now, a portion, most of that is combustion engines. But look at what happened with BYD. BYD, their proportion of electric vehicles and what they call new energy vehicles, electric vehicles, and hybrid vehicles versus their internal combustion engine only vehicles, that ratio switched. Now there's 70% new energy vehicles and 30% they said 30% oil-based vehicles. They have seen a 71% decline in sales of internal combustion engines. They are the best indicator of what the future is going to be like. One of the other larger vehicle producers in China, Geely, is switching all over to electric vehicles as well. They have this whole new platform called the C platform. They have this whole other platform that's coming out later on this year. So it's going to be hard to say what is the best way to play it. I think you need to hold all of the major guys as broadly as possible. You should be prepared to sort of dollar cost average your way in this year, as I think that we're going to see March, April, we're probably going to see a decline in the prices from some of the major players there. Like I said, as they all, like Li Auto basically they reached their production maximum here. They have another factory that's under construction. They don't have another model yet. They're talking about it, but they don't have another model yet, or at least they haven't last time I looked. Neo has failed to deliver on the solid state battery that they talked about. At least as far as I know, they have. The ET7 is coming out with their regular 100 kilowatt battery, but this 150 kilowatt battery solid state that's supposed to charge in 15 minutes, that looks to have been vaporware. If you notice, no one's talking about it anymore, or if they are, it's at least not making it to my ears. But yeah, so there's a bunch of different ways to play that EV market, but I can tell you one of the best ways to play the EV market is to simply buy into the battery electric supply chain, or the battery supply chain. And this is another sector I think you should do via ETF rather than trying to hunt out individual players. And let me tell you why. And this is a really important point when it comes to the lithium industry for the last 20 years has actually been really concentrated in 2 or 3 really big players, with the biggest player out there being Albemarle, who made the vast majority of, and there's another company in China that I forget, but they provided the vast majority of precursor chemicals for battery cathodes and battery chemistry. And almost basically most lithium products were provided by Albemarle. They had a giant share of the market. That is starting to change. Not because Albemarle isn't giant and not because Albemarle isn't growing. It's starting to change because tens of thousands of new companies are popping up left and right that are with new technologies when it comes to mining, new technologies when it comes to refining, and they're all developing new processes to get lithium out of the ground or out of seawater and into batteries. I think it's going to be very difficult to capture any one of these winners out of these thousands of new companies pop up, saying which one is going to be one. I think it's a far better play to say I'm going to own a slice of all of them and participate in. This is one of those times where rising tides are going to lift all boats. If there was any time in history, you couldn't go back to the internet revolution and say I'm going to buy every internet company and they're all going to do great, right? Or I'm guaranteed success. No, you weren't. Like, you definitely weren't. There were a few companies that were successful and everyone else failed. I do think there's going to be more winners in the battery electric supply chain, because this is something that where it's very much unlike the sort of dot-com mania that we had when it comes to the lithium supply chain. It's something that everyone uses now, and our usage is only going to get more and more intense. Remember, it's still needed for your watch batteries, your phone batteries, all that thing. Although I actually think that we're going to see sodium ion batteries here for lower intense needs. Like I think that in the future, our phone batteries are probably going to be sodium ion or potassium ion batteries, our watch batteries too. And I think that lithium is going to be reserved more for your highest energy dense demand, like for cars and that sort of thing. I also think that energy storage technology, stationary energy storage, is probably going to change pretty drastically, and then we aren't going to be using lithium much longer. We're probably going to be using a variety of methods, including simple things like gravity storage, like vanadium flow batteries, all kinds of other things that are out there. But yeah, I think one of the best ways to bet on the electric vehicle revolution is to go out and buy LIT, go out and buy BATT. Those are two ETFs that are focused on the battery supply chain. Yep. So Terrence Kwong says, I picked up Square on a dip at 205, and that's 128. You know what? I want to own more. I think my average cost, I bought it at all different prices, but I think my average cost is pretty high, like 181 or something. And if I didn't have a long time horizon, I would probably be really upset about that. But I want to acquire more. I think 128 is a great place. So I'm wondering to jump into Nikola after delivered real trucks. What do you think? Man, I talked a lot of crap on Nikola 2 years ago when I first started my channel, or maybe it was a year ago. I don't know. Whenever they basically almost went belly up and they got rid of got rid of the original Milton guy, or I can't remember his name. Anyway, he's hopefully I'll never have to hear his name again. Trevor Milton, I think was his name Trevor Milton. So they've delivered a few trucks. I want to see what the test market says before I invest in that, because there are giant challenges with hydrogen infrastructure. With the issue with battery infrastructure is that the means of recharging that battery exists everywhere. They're called plugs. You can use your washer and dryer plug, the same circuits there for a level 2 charger. You can trickle charge with 120 volts. The problem with hydrogen is like you can't reuse any of the infrastructure we have in place now. Like your gas lines aren't going to work, your natural gas lines are going to work, your petroleum lines are going to work. The way we ship things by truck isn't going to be work. There's a whole new infrastructure that has to be designed. So it could be designed something like the way we have natural gas infrastructure here in the US, where we have about 800 refueling stations across the United States for big trucks that run on natural gas. And that seems to work. But it hasn't been enormously successful, even though that natural gas if you owned a natural gas truck, you could literally deliver anywhere inside of North America without a problem. Mexico, Canada, the United States, you probably don't have a problem doing that. It still hasn't really caught on, right? The problem is with hydrogen, though, you have to build an entire infrastructure. That's hundreds of billions of dollars to do that. I do think that hydrogen has a future as a fuel. I just think it has a future as a fuel for maritime shipping, where you're only building the infrastructure you need to provide hydrogen fuel at ports, and that's it. And basically, they won't need to refuel in between ports. They'll be running on battery power inside of the port, and they'll be refueling there. So that's where I see the success for hydrogen technologies. That's one of the reasons I like Ballard Power in that space more than a lot of other companies. I'm not a huge fan of Plug Power, not a huge fan of Nikola in this respect, just because they're not just dependent on building a truck that works, a hydrogen truck that works. They're also dependent on this building this giant refueling infrastructure. It's a lot easier to build a supercharging station than it is to build a hydrogen fuel station. And hydrogen fuel, between wheel to well efficiency, you're looking at, using solar for cracking water, liquefaction, compression, transportation, all that. Wheel to well efficiency is at best 25%, which is better than gasoline, but at best 25%. And it's just, I don't think we're going to invest the hundreds of billions of dollars we need to do that when we already have electric infrastructure in place. But no, could you make a quick buck on it? Maybe. But as a long-term investment, I think it's doomed to fail. I think the idea missed the boat. We should have done this in the 1970s. Bram Norman says 5G, they auction off too much of the spectrum. Europe's 5G spectrum is much further removed from aviation than the US. Who's at fault? I'd say the FCC. So, Bram, are you saying that the FCC should be the one to foot the bill to change all of the older technologies in the planes? Yeah, maybe they should. But these are private. So the president in his speech today made this point that it's private industries that are having this big discussion. But I'm like, man, if you're dealing with bandwidth that is regulated by the government and you're a telecommunications company that's regulated by the government, how private are you really? And if you're dealing with airlines where the entire industry is not profitable as a whole, it's not profitable. It has never been profitable. You have basically one airline that is profitable, Southwest, but everyone else is actually an abject failure and they have to be bailed out by the government every 10 years or so. Are they really private industry as well? So I do think that government is going to force a solution at some point between these two quasi-private private enterprises. They're not really private. They're implicitly backed by the federal government to a degree. So yeah, you may be right about that. I never even thought about that. Never even realized that. I haven't taken that close a look at it, Bram, but now I will. You always say something that makes me go back and investigate something. Markets will be a lot worse when U.S. debt is downgraded. So U.S. debt was already downgraded once. And what happened to markets then? Any guess? They didn't have much more than a temporary shock. I don't want to see U.S. debt downgraded, but U.S. debt was downgraded, I think maybe 2017 or 2018 when we came really close to defaulting on debt. And they removed our AAA rating, or they moved our top rating and moved us down one notch. So we're not really going to be downgraded until we default on debt at some point. If we default on debt, U.S. markets, of course, are going to be horrible. But I don't think that is, and what happened when U.S. debt was downgraded is we expected an increase in interest rates. That didn't happen because as bad as things were in the United States, we're still the best game in town in terms of world debt. We're the only country on the planet, as far as I know, actually Finland might be the other one, that has never defaulted on their debt. We always pay our obligations. Now, right now we're paying you back in inflated dollars, but we do pay back our obligations. So the downgrade of U.S. debt, when it happened, was more symbolic at that point. If we do have a downgrade, another one, it's going to be because we missed a payment. If we missed a payment, U.S. debt is going to be, it's not just that U.S. debt is going to be downgraded. We've got other problems besides that, like massive problems if that happens. So have you looked at news surrounding the massive lockup happening tomorrow? So there's a lockup expiring tomorrow. Is that what we're trying to say? So let's talk about that. If you're talking about a lockup expiring, that opportunity to grab shares is going to be very temporary and very small. That window is going to be very narrow. So this hasn't been a giant concern until say 2020, when like a bunch of like newer investors started getting into it. And I noticed on Reddit and I noticed on comments that people made a big deal about lockups. Like lockups have always been a small, tiny concern in the actual financial world. We realize that some big players are going to be selling, but lockup expirations really matter when it's a thinly traded stock, when there's low volume traded. With Lucid, there won't be giant pressure on the stock. Elon Musk sold 10% of his stock, and everyone blamed the decline on Elon Musk. No, that's not why the stock declined. The volatility in Tesla stock when Elon sold 10% of the company was not out of the ordinary for Tesla stock, meaning the beta didn't really increase in that time period larger than its historical beta. It wasn't out of the normal swings. Like I routinely sell call options on the Tesla stock that I have with a delta somewhere around 0.2, right? Where ostensibly there should be an 80% chance that call would expire out of the money. And at least 2 or 3 times a year, I have to unwind a trade because it's so volatile that I would have to sell that stock and possibly pay a giant capital gains, tax that I don't want to pay, right? So, the Lucid is not a small company. It's not thinly traded. There's got to be millions of shares that trade every day. A lockup expiration, if that's what you're talking about, does not concern me at all in terms of Lucid. It would concern me with a much smaller company, like it would have with Nano Dimension last year in 2020 or something like that. It's much more highly, it's much more widely traded now than it was back then. But yeah, it's not a thinly traded stock. There's a huge float. Not really worried about that right now. So Terrence Kwong says, I have Canopy Grow Tilray. I saw a tweet earlier from Pot Stock Trader that posted pictures of powdery mildew on factory. All right, powdery mildew. I'm a gardener too, so powdery mildew, no fun. Min Tran, $10 super sticker. Hey, buddy, thanks so much, man. You are actually one of the very first people who ever watched one of my live streams, and I've always remember that. You were one of the first people who ever did a super chat or super sticker, and I want to thank you on my broadcast again. Sorry, I was back for a while, but sorry I was gone for a while, but I am back now. So hold on a second. Sorry, it says sorry. It's not the rate, but the summer reduction GDP rose by 7 to 8 trillion. So the government debt increased by 18 trillion. The Fed summer balance up by 8 trillion. This kind of is broken in a wheel crash. So one of the guys you may want to check out and ask him a question on this is to chart the correlation between economic performance and the growth of U.S. debt. The parallels may actually surprise you, and that's Heritage Wealth Planning. Like, he and I have very different opinions on just about everything. He's a bit of a conspiracy theorist, but he's actually he does a lot of research on the history of government debt, inflation, the history of government debt, and economic performance. And he'll show you that the parallels really aren't as clear as you think, especially when worldwide you're viewed as the safest game in town. And a large part of the value of currency, U.S. currency, is the fact that everyone thinks it's so valuable. So until that changes, we have quite a bit of wiggle room. And I know this is a hard concept. This is a very hard concept for a lot of people to understand, is that the US dollar is backed by nothing. It's only backed by faith. It only has value because people think it has value. You can't go to Fort Knox and get $1 worth of gold for $1 or anything like that. We're not on a gold standard anymore. And it's really based on the fact that there's demand for our government debt because we pay our debts back. And at some point, though, if we keep printing money, yes, we're going to have problems. When that happens so I've been in this industry for more than 25 years now, and I've been hearing this every year for 25 years. And I remember talking to you guys who had been financial advisors since World War II, who were saying the same thing, that this has been going on since World War II. So I can look at the example of Greece and say that's got to happen eventually. It has to happen eventually. Something has to change. But the idea that we're growing debt right now, long-term debt, 30-year bonds, paying under 3%. The coupon on those is at 3% or under 3% for a lot of the debt we put on since 2008. We're going through an inflationary period at 7.2% or 7.3% inflation, right? We're paying this back in inflated dollars, in that when we have to pay the bill in 30 years, this is the big thing. If we don't keep growing at the rate that we've been growing, which is, I would have to say, I'm not encouraged by the fact that we can't stop spending. But if we kind of stopped or at least slowed the rate of growth, by the time we had to pay that back in 30 years in inflated dollars, it's not going to matter at that point. And that's actually the point of loaning money out on a long-term basis. That's the whole point of long-term government bonds, is that you take a loan today and you pay them back in inflated dollars 30 years from now. That is the entire point of doing it. And that's one of the things that people don't realize about debt, is that the management of the debt depends on inflation. And we see here. Hello, Jason. What would happen to the market in the case of Russia invading Ukraine? Would we have to dump it all? No, I'd buy like crazy on that day. So, number one, Ukraine doesn't have a ton. First of all, the largest customers for Russia are basically Europe for their gas, right? They don't want to upset that relationship. The United States has been expanding liquid natural gas deliveries to, now we can't power all of Europe at this point, but because of the tensions between Western Europe and Russia, we have made great strides in exporting liquid natural gas to Europe. There's been a couple of new port facilities that have been developed. Exports have been increased and increased and increased. I don't think that Putin wants to give Western Europe more reason to develop more port facilities to handle more liquid natural gas because they can't depend on Russia as a partner. I don't think that Russia is really threatening to invade Ukraine. And for a couple of different reasons. Number one, the people who revolted against the Ukraine and are now in this sort of like separatist controlled area, they are not living well. They are not doing well. And enthusiasm for breaking away simply because you're a Russian speaker has begun to wane in the rest of Ukraine. If they were to invade the Ukraine, they're not going to be welcomed like they were in the two breakaway provinces now. They're not going to be welcomed like they were. People are going to fight back. There's been a couple of different folks that have gone through and done interviews with people, and like even ethnic Russians in Eastern Ukraine right now have started to speak Ukrainian instead of Russian, have started to, you don't see Russian flags there anymore. Some of that has to do with the tensions over the last 10 years or so, but a lot of it has to do with economic conditions. Russia still hung those Russian separatists out to dry. They have not helped them economically. And what they were looking to get was, Russian pensions, financial backing. It didn't happen. So, I'm not sure what's going on with Russia invading Ukraine. I think that Putin likes attention, and I think Putin likes to rattle people. But I don't think he wants to threaten one of his largest income sources, which is gas in selling natural gas for heating to Western Europe. I don't think he wants to give them any more reason to buy from the U.S. So, yeah. So CB says, Jason, just started the Nvidia position yesterday. So I actually involuntarily started the Nvidia position because I sold an out of the money put, and I actually, I wanted to own more Nvidia anyway. I would like to buy even more, but I ended up getting 100 shares at 280, which means I'm underwater already on that. So is Nvidia better than Bitcoin? Is Bitcoin okay to hold? Man, that is an entire... And that's probably like a 20-hour talk. Is Bitcoin okay to hold? So I have Bitcoin. I don't own that much. My entire portfolio of cryptocurrency is under $100,000, and I'm not letting it grow much more than that. If it grows, and right now it's definitely not more than that. But when it does grow, I get rid of it and shift it into cash or shift it into stocks. Largely because I've never hit one of those home runs where I made like 100x on a cryptocurrency or anything like that. But largely, it's going to take a long time for this to evolve to a point where these currencies are stable. It's going to take I'm a big backer, big fan of Solana, and they've had enormous problems in the last couple of months. And you're seeing people lose faith in the Solana technology. Now, I'm not on that bandwagon at this point. I think that every project is going to see issues. And but yeah, so is Nvidia better than Bitcoin? I think that there's zero chance that Nvidia could fail in the next 10 years, or an infinitesimal chance that they could fail in the next 10 years. I think that there's an outside chance, a small one, that Bitcoin could fail, right? But the bigger case here is that I see that the biggest risk is that Bitcoin simply won't outperform Nvidia. And I think that's an entirely realistic risk. Is Bitcoin going to 10x in 10 years? No. Do I think that Nvidia will 10x in 10 years? I do. I think in 10 years it'll 10x. And I don't make videos with titles that say 10x this, 10x your money or whatever. I think it's 10x in a decade if we're lucky. And if all of the sort of technological revolutions happen, but I don't see Bitcoin 10xing. Period. It's not going to happen. Even after the halving of reward for mining, all that stuff, I think we're going to see a giant bump up in price, but I don't see it 10xing from this point over a 10-year period. CP says Nvidia is an add and hold forever. I do agree that it's a hold forever. Nvidia, I'm going to admit to a big mistake here. I sold some Nvidia like right after it got to about $250 a share back in 2020. Partially because I thought my businesses were going to go under at that point. I wanted to have cash available. and I ended up missing out on a giant run up, just a giant run up, and my businesses were fine, right? So yeah, and so I don't want to make that mistake again. Buying Nvidia or adding it to back into my portfolio. I've done that, and then I got another 100 shares on Friday involuntarily. I might add. I would much rather buy it at today's price than the price I got it at. But it's a buy and hold forever. I'm never planning to sell those shares. Yeah. Red says, thanks for especially the beat and raise GPU with the high value, likely crash crypto market, maybe 150. So they're just not dependent on crypto anymore. Not even close to being dependent on crypto anymore. 2 years ago, if you had said that they're going to have because of the crash in crypto, they're going to have like a major decline in price, like down to 150, I think that would have been a reasonable assumption to make. It's a much smaller portion of their business than it was 2 years ago. They've just diversified away from that. So had Nvidia 2 years now in the long term. Okay. Yep. Outlook for Microsoft with their Activision purchase. Man, this is something that I haven't even had time to digest yet. So things so I'm very much into the technology of the metaverse, very much into the technology of video games. But in terms of actually video games themselves, I'm pretty weak on. I don't really understand everything that's in the portfolio of video game makers or how it's monetized. Just doing a recent study on what was it? Grand Theft Auto, and realizing I had no idea until recently what an empire Grand Theft Auto was and how much money they've been making on that video for year after year. It's been around for a really, really long time. So I'm weak on that portfolio. So I'm not prepared to answer any questions on that right now, just because I haven't dived into that yet. And I'm very interested in that though. There's a lot going on with Microsoft right now. Activision, the acquisition of Activision looks to be actually a strategy, a metaverse strategy, not a game, not just a simple like gaming console strategy. It is a metaverse strategy for them. So Kent Go says, what do you think about Neo price target? Who's Neo price target? I don't generally give price targets on my channel. I don't see them. I don't see that they're really all that useful. A price target it doesn't have a ton of meaning. Last year when the price got up to $65 a share, or maybe that was at the end of 2020 instead of 2021, pretty excited about that. Knew that wasn't going to stay there, but I'll be honest with you, I didn't expect it to hang on around $30 a share. I didn't. So I sold in December of 2020. I sold some of the shares that I had of Neo just because Neo had grown to be like more than 10% of my overall net worth. And I don't want to have anything that's more than 10% over my overall net worth. So I sold some of it and diversified it into some other stocks. And it's right around where I sold it over a year ago, like 13 months ago. I did not expect that. I expected Neo to continue to rise in fits and starts, rise and fall. And I expected Neo to be worth somewhere in the 40s today, and be solidly in the 40s today. Not what I expected. So do I think that Neo's going to have, I think that they're a bit beaten down on just justifiably at this point right now. And I think that we are going to see a return to, we're going to see them rise organically here as we see their delivery start to rise and that sort of thing too. And as we see progress on Neo Park and so anyway, so let me see here. Thank you for answering my last question. Your thoughts on Unity, Roblox, Microsoft, and Facebook. So I have gotten hammered on Roblox. Unity, my cost per share, really, I'm not too far off there. I think it's between 110 and 120 is where I acquired most of my shares for Unity. And I acquired those by selling out of the money puts when it was really higher than I wanted to pay. Roblox, man, my average cost on them is about $120 a share. I'm getting hammered on those. I think I own total about 400 shares of Roblox. And of course, I'm getting hammered on that. But I'm just selling some calls on that right now to generate some income well out of the money. I'm not looking to sell those either. I think this is going to be pretty volatile for the next couple of years. It's going to be up and down, up and down. But I'm a long-term holder of Unity, and Unity and Roblox. So Microsoft I've had in my portfolio forever. I have not added to that position in a decade. Facebook, I actually don't own Facebook. I don't own Facebook other than through an ETF or mutual fund for a variety of reasons. By the time, it was a matter of timing and allocation of resources. It's not something that I bought. So, so we talked about Disney, I think, on the last live stream, where I think that long term, you're probably not looking at explosive exponential growth from Disney, but I think it's a solid player and a solid growth story over the next decade. If you look at all of the different properties that they own and what they're doing right now to develop a universe for each of these properties, spin-off shows, new storylines, new plot lines, I think that their streaming service is going to grow for decades and decades and decades, and they're going to find new ways to make money off of the properties that they do own. So I'm actually a big fan of Disney. Like so I don't own any individual Disney shares. I'm actually thinking about going out and buying a nice even lot of 100 Disney shares because of how much I think they're actually going to grow in the next couple of years. So, yep. Zing Lu says, thank you for answering my last questions. Your thoughts on, Meta Play. No, I think that in terms of Microsoft and Facebook, they are sure bets if you wanted to buy some today. Unity and Roblox, I think they're really great. I think they could be great bets. They could be tremendous bets in the future, but they are a little bit more risky than, say, a Microsoft or a Facebook. So, CB says Xpeng designers are very good. Price point is value, really good value. So I think it's really good value if you're a U.S. consumer. If you're a Chinese consumer, it's still kind of pricey. But it's a much broader market than Neo's market is. They're much higher up there on the food chain. Their margin is not that great though. Neo's margin, because they're just more expensive vehicles in terms of the price that they command, but the technology is really not that different. But I think that Xpeng needs to enter volume production before we see a real increase in margin there. And so I'm looking forward to seeing that. But yeah, Polestar. So I'm looking into Polestar right now. Apparently, they've already got test vehicles here in the U.S. Apparently, they're going to start selling some here in the near future. I'm a wait and see kind of guy when it comes to them. Polestar is owned by Volvo, which is owned by Geely at this point. Geely's, like I said, they've made tremendous strides with their own platform as well. What do you think about Apple? Man, my history with Apple is a history of being wrong about most things most of the time when it comes to Apple. Okay. So definitely don't take my word. So I have missed the boat consistently on Apple. At every point that I've seriously considered buying something, my response was to myself was, how much larger can they get? Or how much more innovative can they get? My biggest one was when Steve Jobs died. I've been an Android guy for a long time. And my thing is Android's technology is usually consistently, the top of the line Android product is usually better than the top of the line Apple product at any point in time. What I didn't realize is that actually doesn't matter to the consumer. And it's branding that matters. And Apple just does a much better job of branding, and they have a fanatical and loyal base. And that's a big weakness that I have, is not understanding the power of branding. I'm really into the tech, right? So I'm consistently wrong about Apple. Of course, it's a great investment. Past has indicated that it has been a great investment. Is it a great investment for the future? I still don't know the answer to that. I still keep thinking that they reached their pinnacle, and I keep getting proven incorrect. So don't take my word for that. All right. Does apps have any hope? Not sure what you're referring to, so I'll have to take a look at that. So let me see here. Let me look back here. On 5G, check out Blanco Colorio 177 Pilot. There's a few videos on. Okay, I will do that. So, my take: what's more important, high-speed gaming on a phone or landing safely? Really depends on how much you like people, Bram. It really depends on how much you like people. Yeah, the U.S. dollar is backed by the military. We can have a long discussion on this at some point. So, any thoughts on Fubo? Not any that I'm willing to share right now, Mr. Glidewell. I actually don't know that much about the company. I know it's been in the ARK portfolio several times. It may be still in the ARK portfolio. I haven't looked in a bit, but I don't know enough about the company to comment on that. So, see here. See, I regret buying and holding on for dear life Bitcoin, ETH, 20% APY on Luna, stablecoin. How could you regret, holding on for dear life for Bitcoin and ETH? You must not have been holding them for very long. And when you say hold on for dear life is like a years long hold, right? That's not it's not a short term hold, because the trajectory for Bitcoin over the last 10 years has only been up. If you look over like long period blocks, year after year after year. The same thing is for Ethereum, and everything else is all these other altcoins that are coming out, thousands of them, by the way, and dozens per day. Almost all of them are going to fail. Right now, I think there's only a small chance that Ethereum fails. There's only a small chance that Bitcoin fails. A slightly larger, but still really small chance that Solana fails. And those are the three that I probably have the most confidence in, and mostly Solana because there's the most development on that network, and probably Ethereum. After that, I think Bitcoin is going to end up being mostly a store of value. So, so I says, I love it that smart people like you are aware of the debt balance issue, but not look through the numbers. We are unwinding 30 years of low inflation and living gluttony. No, it's true. I should pay more attention to that. I probably should. Yeah, it's not something that I've been paying attention to tremendously in the last couple of years, just largely because I've been hearing it for 25 years, and maybe I should pay more attention to that. What percentage of your portfolio do you allocate to growth stocks? Do you fluctuate in this percentage like now? So it kind of depends on what you're calling growth stocks. So about 70%. I hold almost no bonds. The only bonds that I hold right now are junk bonds, or I may hold bonds inadvertently through some of the ETFs that I have, but about 70% of my investable portfolio is usually in ETFs or mutual funds, broadly held, and index funds. And about 30% of it's going to be held in individual stocks. 100% of that 30% of individual stocks is growth stocks, right? With the exception of a couple hundred shares of Realty Income, a couple hundred shares of Res, which is a residential income, and one or two legacy stocks like Microsoft that I owned. Is that a growth stock or is it a value stock? Not really sure. Let me see here. But yeah, mostly in my individual stock portfolio, it's all going to be growth stocks. Why wouldn't I swing for the fences? I got everything else covered in. I have an emergency fund. I have the responsible 70% of my portion of my portfolio. I don't respond to market panic, so I don't need bonds to smooth things out for me. I'm perfectly willing to just wait and not take withdrawals off my portfolio if stocks are down. And that's one of the reasons that people like bonds in a portfolio, is to sort of smooth out the rough edges. I don't need that. So almost everything I have in individual stocks is going to be in growth stocks. I'm perfectly aware of the risk, willing to take it. Losing everything would hurt a lot, but I know that I'm not going to lose everything because it's fairly well, even that portfolio is fairly well diversified. Is Tesla overvalued? It depends on how long your time horizon is. If you want to dispose of Tesla, in terms of traditional metrics, if you wanted to buy Tesla today and dispose of it anytime in the next 3 years, then Tesla is probably overvalued. If you're like me and you have an extremely long-term view on how things should work out with Tesla, how things are going to work out with the economy and technology, then Tesla's just getting started. You are looking at the largest and most expensive component of the most valuable products you sell today, which is the battery, getting cheaper and cheaper and cheaper, meaning the price has basically been cut in half over the last 2 or 3 years, and that's continuing to decline. So their margins are only going to grow. They're already on a per vehicle basis the most profitable car manufacturer on the planet. Their per vehicle margin is actually just beats on the Model 3, beats the pants off of everything else that's being produced right now. That is only going to, and that's when they've only made 900,000 vehicles last year. What do you think it's going to be like when they make 5 million vehicles, 10 million vehicles? They're going to get better and better and better, right? Yeah, I would love to go on and on and on about Tesla. On a long-term basis, they're an extremely undervalued company. If you're short, if your time horizon is even 5 years, I think well, no, even in a 5-year basis, I think you're still going to do just fine. But if you're looking to buy it at today's prices and dispose of it by the end of the year in 6 months, I think you could end up disappointed. Yep. Bobby says, can you come on my live and talk crypto? I'm a new YouTuber. Happy to do so. I'm not exactly a crypto expert. Maybe I would point you in the direction of someone who is, though, and you can have them on your live stream. I'd be happy to come on your live stream and talk about anything actually, and just so you can get some subscribers from my channel and that sort of thing. So, Nvidia at 60 minutes per PE and 27 is all about huge growth. Much of that comes from ASP increase due to mining and stay-at-home gaming GPU shortage. When that growth slows, so maybe you didn't listen to the earlier part of the live stream. Nvidia has a lot more avenues than GPUs and gaming. A lot more avenues, and a lot of those are things that are not necessarily very obvious to the public. Some of that's going to be self-driving in the future. But most of that is actually going to be coming from, or a lot of that's going to be coming from genomics, and a lot of it's going to be coming from AI and a lot of other avenues here. But presently, a lot of their revenue comes from gaming, but not as much comes from crypto mining as you think, and that has really not been all that important for about the last year and a half. It's been less important for them than other aspects. But if you think that stay at home and gaming is going to decline, stay at home is not going to decline. I think that that people that are home now, working from home, they're going to stay at home. I don't think companies really want to pay that much in rent. I think that most people that are stay at home now, they're not coming back to office full time. They're going to come back to the office 1 or 2 days a week. They're not going to have their own office. They're going to share it with another 1 or 2 people that also come in 1 or 2 days a week, that sort of thing. What is a good cash alternative that will at least beat inflation? There is no cash, and there has never been a cash alternative that would beat inflation. So that functions the same way that cash does, meaning that it has a stable value like cash does. So there are stable value funds that will help you, but right now they're not going to help you very much at all. So even in the past, when inflation was really low, say at 2%, your stable value funds were paying like 1% a year, 1.5% a year. So if you take no risk at all, you get no reward. That's the way investing works. It's been for the last 10 years or so, there's really been no reward at all for having cash. So Lemming Cliff Jumping says, thoughts on SoFi. Talked about SoFi a couple of times in the live stream. I'm not going to do it again just because I just want to get to all the different questions here. Apple's like Hotel California. You can check out anytime, but you can never leave. You know what's kind of funny is the tech crackdown happening in China was happening because all of the big technology companies in China were acting just like Apple. They were creating these technology silos where once you got in, the problem was they were actually preventing you from interacting with the rest of the internet, the rest of the world, and that's something that China decided to stop, saying it was anti-competitive. But I'm sure there were other political reasons behind that. But I found that ironic that when the actual reasons for the tech crackdown were described by Chinese regulators, it sounded a lot like the way Apple works with the Apple Store and Apple Pro and all that stuff. So very funny. Bram says also, made my money with MS-DOS. Oh my gosh. Use the money to buy iPhone. iPads, give me a slap. App Harvest and Aquabani look interesting. I don't know about App Harvest, but Aquabani I did take a look at, and we have discussed this a couple of times before. Very interesting. Yes. Jason, Hyliion is getting stupid cheap. Time to take a look. So I've actually been a fan of Hyliion for a while. I like their fuel agnostic approach to Class 8 trucking. Something has to happen with Class 8 trucking in this transition that we're doing right now. I like their fuel agnostic approach. I like their hybrid approach. Stupid cheap. It's only cheap if they have revenues, all right, and the price is reflective of those revenues in some way. The problem is they don't have any revenues whatsoever. Their balance sheet is starting to look weaker and weaker. I really like Hyliion. I want them to be successful. I want to dive in. I think I looked a couple of days ago. They're like $5 a share or something. I want to take a dive on that. I just don't know that I'm not throwing money down the drain. And I really like Jeff Healy. I mean, he's an actual engineer who's the CEO of a company. He's just kind of a quiet guy who does what he says he's going to do. But are they really selling any of their hybrid drives? And is their truck in production at this point? Like, I have not paid that much attention to this company in a little while, but is the hybrid truck ERX on the road? I want to know. So also Natural Shrimp Inc. Natural Shrimp Inc. All right. So you're big into into food, which, man, I have an interest in mariculture too, in not just like aquaculture, not just like aquaponics, but also in aquaculture, like growing like Macrobrachium rosenbergi, which is like a freshwater shrimp in my backyard. I really want to try that at some point. You and I should have a discussion about this. So Hyliion is not generating significant revenue yet, hamster, and that's a problem in a market when valuation matters more than ever. That's true. They're not developing any. They don't have any revenue as far as I know. Terrence Moss says, I've been having a majority in BTC and ETH. Altcoins have clearly outperformed side long term, but there's much more opportunities out there. Okay, volatility. So the problem with altcoins clearly outperforming is, like, I bought a couple of those as an experiment, and yeah, I did okay in Shiba Inu. Made a tiny bit of money with Dogecoin. I'm like putting $100 here, $200 there. But I'm looking at, Coinbase every day, and I don't have any other like crypto wallets or anything, but looking at Coinbase every day, and the coins that are coming up are all crap that I've never heard of before. That are the biggest movers for the day. They're like 50% a day, 70% a day. I think it's just a gamble at that point. You're not really investing. If you want to invest in, and it's still hard for me to call it an investment. If you want to invest in cryptocurrency, you're really looking at Bitcoin, Ethereum, Solana, Algorand. Those are my big four. Maybe one or two others. But one of the biggest ones, Cardano, I don't think they have any hope in hell. Their community is actually kind of poisonous. So what do you think the best hedge for inflation is? Rental real estate is the best hedge for inflation. Every year that lease comes up, if you have inflation, you get to raise the rent. Also, your home price will go up with inflation as well. And that's the way. That's one of the things that housing prices are fairly well correlated to inflation. Rents are fairly well correlated to inflation as well. I think that's one of the better hedges for inflation, because it not only has a capital gain aspect to it, but it has an income aspect to it as well. You might want to look at rental REITs right now. They're a bit expensive. I think they're just going to get more expensive here in the future. What is your opinion about rare earth elements? China's monopoly on that. So it depends on what you mean by rare earth elements. If you're looking at just the lanthanides, the 17 elements on the periodic table that are, I think the name of them is the lanthanides. They're really not all that rare, and they are available in places outside of China. It's just that China pretty much has a monopoly on them right now. They're becoming less important as we're starting to develop new motors. The permanent magnet motor looks like it's going away. Mercedes and BMW have both come out with something that is a magnetless motor that I have not had time to look into yet. Remember, we still have the induction motor as well, which some of the best induction motors now are only about 4% less efficient than some of the best permanent magnet motors. So I think that in terms of the electric vehicle revolution, that becomes a little bit less important. When it comes to other industries, I don't know how important they are to other industries at this point, and whether or not they're replaceable. But a lot of what people tell me are rare earth elements are not actually rare earth elements. I have people that insist to me all the time. If you try to friend me on Facebook, I won't friend you. But I have friends from like high school and things like that. But I have people all the time that tell me that that lithium is a rare earth element. It's not a rare earth element. It's not a lanthanide. And in fact, it's not rare at all. It's massively abundant on this planet. It just doesn't occur in its elemental form. It's always bounded to something else. But in terms of like rare earth metals, in terms of the technology we talk about on my channel, I think it's less of a concern than it was 10 years ago, because we're diversifying. We're diversifying motor, like the motor designs. We're diversifying battery chemistries, and many of the things that people thought were rare earth elements aren't actually rare earth metals or rare at all. So, but yeah, I do think that the world is probably going to try to diversify supplies away from China just because for security reasons. Why do you think markets are going down lately? A couple of different reasons. Number one, the ever-present threat of inflation. I have actually been, people have been talking about hyperinflation for me for years, and I've been expecting some inflation for years at this point. The rate of inflation acceleration has already slowed, though, and I think that inflation is probably going to peak this year, and that it's. I don't think we're going to see a retracement. We're going to see a retracement in prices for things like groceries and things like that, but certain items are probably not going to go back down to their old values. Prices in restaurants are not going to go back down because labor prices have increased permanently. That's something that, and I can tell you from being a business owner, that labor prices are not going to retreat. The culture, especially in the United States, spent so long telling people that made minimum wage that you were worthless, and then suddenly we have this pandemic, and now they're essential workers, and all the years of insisting that people go out and get better jobs and stop doing things and we make minimum wage. Well, guess what? People went out and found better jobs, or at least demanded better treatment for their employers. I've even raised wages where I employ people too. So, and I don't have any problem with that. Yeah. So, but I think that for certain things, though, the inflation is permanent. Although for the vast majority of things, once supply chains are more like they were before, not exactly like they were before, but once supply chains are more regular again, competition to sell the all these things that were previously scarce, competition to sell things that are suddenly abundant again is going to drive prices back down. So that's typically what happens in these cycles. And I do think that that supply chain issues and high demand is the primary cause of inflation. Wage inflation is a secondary cause of inflation. The supply chain worries go away. The wage inflation does not go away. I think that we're going to see higher wages and higher wages for lower end for workers on the lower end of the economic scale. I think we're going to see that for quite some time. And I think overall for the economy, that is a good thing. I want to have a wider customer base for all of my businesses. And that's one of the things that worries me. For one of my businesses that I own, I can literally talk to 4% of the population of the entire country because the rest just can't afford that service. I would be really happy if 10% of the people could afford that service. My market would be huge compared to it. But no, that's kind of one of the issues here. Here, see Grace thoughts. So, any thoughts on T7 open, please? Yeah, I was actually looking at. I was actually looking at open today, and looking at it in comparison to, say, buying a Zillow or buying a Redfin. And I'm kind of on the fence here as to whether or not I go with the newer upstart open, or I go with the company that stumbled recently, Zillow, because that's a good value play. And I'll be honest with you, I'm leaning more towards Zillow as the value play right here now, and not with Open Door. So I like Open Door. Don't get me wrong, but I think Zillow has better name recognition here, and so Hey, keep up the good content. May have asked already, but sorry, just joined. What are your top EV battery picks for the long term? So, yeah, we did cover this a little bit earlier, and I don't want folks to go out and try and buy individual stocks for EV battery picks. And the entire supply line for EV batteries is really important. And the problem with trying to pick winners now is that so many new companies are popping up, and we don't know which one of those are going to be successful or not. But you actually have very few choices where you could actually individually go out and buy stocks in an EV battery company. Like LG just went public on South Korean exchanges earlier this month. CATL is only available on the Hong Kong or in China and on the Hong Kong exchange. BYD is only available over the counter through here. They're still like the fourth or fifth largest battery producer on the planet. And Tesla is only selling batteries to themselves. So I do think, though, the whole supply chain is an important thing to invest in. And I think you should invest in the ETF, either LIT or BATT. Those are two good ETFs to look at. Of course, I'm not recommending that you buy or sell one on a YouTube live stream. You have to do your own research, guys. So do you think real estate will get cheaper if we start do you think housing will get cheaper if we start 3D printing it? Not immediately. So I was an early, I may be biased here, guys, but I was a early, also, thank you, by the way, for the super chat. Let me just want to remind you guys that the super chat features are on, sticker features are on if you feel so inclined. Yeah. So do I think they're not immediately going to get cheaper. Nothing done by 3D printing is actually cheaper than manufacturing it in the old ways yet. But I do think that is coming in the future. How far out in the future? Somebody in my Patreon group was actually asking about 3D printing homes and whether or not there is any public company out there. And I couldn't find a public company out there for 3D printing homes. I did see some really interesting YouTube videos, though, on 3D printed homes. Not sure if that's going to get immediately cheaper or not, or if people even want to buy 3D printed homes. Look at the lack of success with modular homes versus traditionally constructed homes. Modular homes are a lot cheaper. They're built off-site, assembled on-site. They're a lot cheaper than a traditionally built home. So does your wife ever watch your YouTube videos? Never. My kids do all the time, but my wife never watches my YouTube videos. What do you think about Charlie Munger doubling down on Alibaba? Wow, man, that's a big question. So the problem with Alibaba is that Jack Ma has simply fallen out of favor with the Communist Party. I don't know if you guys saw the speech that probably got him in trouble. None of you would probably think that speech was incredibly offensive in any way. It's normal criticism that you and I would throw at our government at any time. And yet that was seen as a reason to make him disappear for 6 months. I think there were probably a significant amount of people that thought Jack Ma was dead. I think that Alibaba can continue to do really well for a number of years. I think that they're probably going to go through sort of an anti-conglomerate stage here where they're going to be spinning off companies to take some regulatory heat off of them for a while. But I think that a lot of Jack Ma's larger ambitions are going to be thwarted by the government. And I'm going to say one other thing too, and maybe I'm just biased against Jack Ma here. I saw an interview that he did with Elon Musk, and man, I was not impressed with Jack Ma in comparison with Elon Musk. Like, I could be wrong about this, but Jack Ma is basically an MBA running a Fortune 500 company, which there's lots of MBAs running Fortune 500 companies. But that's kind of the way I see him. And, Elon Musk is basically a super intelligent alien. That's the real big difference between the two. I think that Alibaba is going to do great if they concentrate on selling things. I think that in terms of developing technology, Jack Ma is not the person to lead that company. And that may be one of the reasons that Charlie Munger is doubling down on Alibaba is that they're old school investors. They're really about what thing are they selling, what space in the market do they dominate. He looks at AliExpress And Charlie Munger's looking at AliExpress, looking at the delivery network, looking at all this like traditional stuff that he should be looking at. But they're spending a lot of money. Alibaba's spending a lot of money trying to push into AI, trying to be more like Amazon than right now. Alibaba is like Amazon 15 years ago, and they want to be like Amazon today, where they're a technology leader as well. I'm not sure they can do that with Jack Ma in charge. He's just not a technology guy. So, are you dollar cost averaging, waiting for more drop at the moment? Actually, I am always dollar cost averaging. So, with all of the disposable income that I have not allocated to bills, everything I do gets invested on a monthly basis, weekly basis, daily basis, whatever it comes in, it gets invested. So I'm constantly dollar cost averaging. I have an emergency fund that's for emergencies, but for the most part, I don't really hold money back waiting for dips. And largely because I've seen the research and I've done the research and shown that most people still time the dips wrong. It's probably better just to dollar cost average for a lot of things. So 3D printing, factory built is the answer. I own a 50-year-old Allocate home, trucked in 2 halves. The only bad workmanship was what was done by local contractors. I bought it the first time in 1971. Yeah, so I was an early investor in 3D printing, really early, like 2011, 2012. And I got burned on all 3 big investments that I made in that, because I really was very enthusiastic about it. So I may be a bit biased here, and I'm just maybe down on all types of 3D printing, but I was not even a giant fan of Nano Dimension that everyone else was a couple of years ago. I did a video on it where I was like positive, but sort of like cautiously positive, and I did sort of a follow up on that too. And that's a totally different market than like 3D printed homes. But there hasn't been a truly successful application of 3D printing yet, like a large commercial success. I'm still waiting for that to happen. So Little Sam says, "Lol, I've seen the interview. Elon looks so disappointed." He did. He really looked like when Elon Musk and Jack Ma were in that meeting, and Jack Ma went to that "I'm not a technology guy," and then he kind of described his philosophy. Elon Musk looked like a 7-year-old boy on Christmas Day that opens up this giant box and it's just like tube socks or something. That's literally how disappointed Elon looked with Jack Ma. Like, the guy has no, like, with what little emotions that he has no ability to disguise them. So, RMO, are you talking about Romeo? The Jenny or Danny Gebber Michael says, "What do you think about RMO?" Are you talking about Romeo? The battery company. Let me see here. All right, so let me know what you're actually talking about here. Yeah, so when it comes to some of those Chinese personalities, though, I don't think we're really getting an accurate picture of what they're like. Like the CEO of Xpeng, He Xiaopeng, is supposed to be a real character, like a bit of an eccentric out there, and the CEO of Li Auto as well is supposed to be kind of eccentric, and then kind of the CEO of Neo is sort of your straight-laced entrepreneur guy, sort of that new second wave of entrepreneurs out there. And but He Xiaopeng and the guy, I can't remember, Lee, whatever, who's the CEO of Lee, they're supposed to be like true characters. The GMO, RMO. Whoops, I put in GMO instead of RMO. Talk about Romeo Power. So I've talked about Romeo Power before. Oh man, I think the last time I talked about Romeo Power, they were significantly higher in price. A lot higher. Well, okay. So I did a little bit of research on Romeo Power, and to tell you the truth, they have good volume on their stock right now. I tend to not cover penny stocks that are under like $5 a share. I did look into them briefly a little bit. I do like the fact that they are led by an engineer. Right? It's not a Trevor Milton kind of case here. But I don't understand what it is about their technology that makes them special. I don't understand what it is. So, and I have yet to see any of the big deals that they were supposed to sign come to fruition. So, I'm looking at Marathon Digital Holdings. George, I have not taken a look at this company before. And so Marathon Digital Holdings operates as a digital asset technology company that mines cryptocurrencies with a focus on the blockchain ecosystem and generation of digital assets in the United States. The company was formerly Marathon Patent Group Inc. and changed its name to Marathon Digital Holdings in February of 2021. Founded in 2010, headquartered in Las Vegas. So it's hard for me to have an opinion on this company. They have almost no revenues. They had 500,000 revenues in 2017, 1.5 million revenues in 2018, 1.9 million or 1.2 million in 2019, and 4.36 million in 2020, and with giant losses throughout there. So it's hard for me to have an opinion here. They're not really generating enough in the way of income and for me to really think about it. And I would need to look. I would need to look into this a bit more. So yeah. Yeah. All right, guys. I always end my live streams when I start to get super hungry, and that is happening. And especially doing this one completely sober with no beer just means that I got hungry a little bit sooner. But I am back on the bandwagon, and I will be doing these at least once a week, maybe even twice a week. I like talking to you guys. Thank you so much for coming today. I know it's been a while since I've done one of these, but I'll see you next time. Thank you so much, guys.